Ladies and gentlemen, good day and welcome to the Acutaas Chemicals Limited Q1 FY26 earnings conference call hosted by JM Financial Institutional Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Krishan Parwani from JM Financial Institutional Securities Limited. Thank you and over to you.
Good evening, everyone, and thank you for joining us on Acutaas Chemicals Q1 FY26 earnings conference call. Today we have with us Acutaas Chemicals Management, represented by Mr. Naresh Patel, Chairman and Managing Director, Mr. Abhishek Patel, Vice President Strategy, and Mr. Bhavin Shah, Chief Financial Officer. I would now like to invite Mr. Bhavin Shah to initiate the proceedings. Over to you, sir. Thank you.
Thank you, Krishan. Good evening, everyone. We are pleased to welcome you all to our earnings conference call to discuss Q1 FY26 financials. Please note that a copy of our disclosure is available on the investor section of our website as well as on the stock exchanges. Please do note that anything said on this call which reflects our outlook towards the future or which could be construed as forward-looking statement must be reviewed in conjunction with the risk that the company faces. The conference call is being recorded and the transcript along with the audio of the same will be made available on the website of the company and exchanges. Please also note that the audio of the conference call is the copyright material of Acutaas Chemicals and cannot be copied, rebroadcasted or attributed in press or media without specific and written consent of the company. Now I would like to hand over the floor to our CMD, Mr. Naresh Patel, for his opening statement. Over to you, sir.
Thank you, Bhavin. Good evening, everyone. I hope you are all doing well. Let me begin by briefly touching on the key industries we operate in, and then I shall move to business updates. Starting with pharmaceutical, raw material prices have remained stable and demand for our products is steadily improving. The CDMO segment continues to attract strong interest. Battery chemicals, this segment is seeing significant momentum. The US has introduced the One Big Beautiful Bill Act, replacing the IRA. While this removes subsidies on EVs, which could impact consumer demand, it retains and in some areas strengthens the manufacturing-related incentives. The Act restricts participation from a set of prohibited foreign entities and accelerates the sunset of manufacturing credits. This is driving urgency among manufacturers, and as a result, we are seeing a noticeable uptick in customer interest for our battery chemicals offerings. Moving on to the semiconductor industry, we are seeing a similar dynamics. Customer wants to diversify their supply chain and are looking for partners closer to their manufacturing bases. This brings me to a key development. We have entered into joint venture in South Korea named IndiChem, where we are investing approximately KRW 30 billion. We will hold a 75% stake, while our Korean partner brings in technology and market access in exchange for a 25% stake. The facility will manufacture specialty chemicals used in chip production. We have strong visibility on both the product mix and customer base for this venture. While I can't share customer names, but would like to highlight that we already have good visibility on who our customers will be and what kind of business we are expecting from this venture once the plant is up and running. Now coming to our Q1 performance. Our revenue for Q1 FY26 grew by 17.3% year-on-year to 2,072 million Indian rupee. The growth came primarily from our advanced pharmaceutical intermediate business, while the specialty chemical business was steady. Abhishek will walk you through the numbers in more detail shortly. Coming to the business updates, we successfully completed a virtual audit of our Unit 2 at Ankleshwar by Japan's PMDA, and I'm happy to say that it is now being declared GMP compliant. That means both of our pharma intermediate facilities are now PMDA GMP certified, something we are proud of, as it reflects our strong focus on compliance and quality. We are also continuing to strengthen our team, especially at the middle and senior levels, bringing in people with deep expertise to lead specific projects or business areas. This helps us operate more efficiently and allow the core leadership team to focus on long-term strategy. To conclude, we have good visibility in our pharma intermediate business as well as for the specialty chemical business. Therefore, I am confident we shall deliver 25% growth with stronger margin this year. With that, I shall now hand over to our Vice President Strategy, Abhishek Patel, who will take you through the detailed business update. Over to you, Abhishek.
Thank you, Naresh Bhai. Good evening, everyone. Let me provide further insight into our business performances. Starting with pharmaceutical intermediate. This segment delivered revenue of 165.8 crore in Q1 FY26, which is strong growth of 23.3% YOY, which was driven by core advanced pharmaceutical intermediate business as well as the CDMO segment. Moving on, specialty chemical business. This business segment reported flattish revenue of 41.4 crore during the quarter, while the commodity chemical business saw healthy growth driven by volumes and steady pricing. This was offset by softer performance of Baba Fine Chemical business. On a capital expenditure side, CapEx for the quarter stood at 69 crore, primarily allocated to Jhagadia site for electrolyte additive projects. Let me give some further updates on the CapEx. Ankleshwar CapEx stands completed. Last pending block has been commercialized in the current quarter. Electrolyte additive CapEx at our site in Jhagadia is on track and expected to be completed by Q3 FY26. Coming to solar, in addition to 10.8 megawatt plant, which was commissioned last quarter, I am delighted to share the successful commissioning of remaining 5 megawatt solar plant. Now we have in total 15.8 megawatt power plant, which will offset majority of our electricity cost at our Sachin, Ankleshwar and Jhagadia unit. Full benefit of this solar power plant will be visible from Q3 FY26 onwards. CapEx for pilot plant has already started at our Sachin unit. We hope to complete the same within a year time. Overall, the CapEx for the current year is expected to be around 250 crore, and we have sufficient cash on hand to fund this CapEx. On the business update, starting with pharmaceutical intermediate segment, our remaining CDMO projects are progressing as per plan and are expected to begin contribution to the top line from Q4 FY26 onwards. Moving on to semiconductor business, as Naresh Bhai mentioned, we are investing around KRW 30 billion in Korea in a joint venture named Indichem, wherein we will be holding 75% stake. Remaining 25% stake is given to our Korean partner for bringing product, technology and market access. To reiterate Naresh Bhai's point, we have strong visibility on both the target customers and the product pipeline that we aim to manufacture under this venture. The capital expenditure plan and location of the plant have already been finalized, and we now moving swiftly towards execution. We expect CapEx to be completed in second half of the calendar year 2026, with commercial production beginning by late 2026 or early 2027. On the customer front, we continue to build strong relationship in both Korea and Japan. While we are already well advanced in customer engagement in Korea, I am pleased to share that in Japan, we are in final stage of discussion with a large multinational customer. In our battery chemical business, I am happy to report that we have introduced couple of new products with both existing and the new customers. Due to confidentiality agreements, we are unable to disclose the further details at this point of time. However, we expect these developments to translate into commercial contracts starting FY27. Before I conclude, I want to reaffirm our confidence in delivering 25% revenue growth in FY26, and on the margin front, we are again committed to drive the further improvements. With that, I will hand over floor to our CFO, Mr. Bhavin Shah, for the financial update. Over to you, Bhavin bhai.
Thank you, Abhishek bhai. I would like to briefly highlight the key performance metrics for the quarter before we open the floor for questions. Before I start with the quarterly numbers, I would like to highlight that, as mentioned by Naresh bhai and Abhishek bhai in previous earning calls, our Q1 is always the softer quarter due to the nature of business, and this has been the case for the last 15 years. And therefore, the number might look suppressed on a sequential basis, given our Q4 is always the strongest quarter. Having said this, let me start with the quarterly performance. Revenue from operation for the quarter reached 207 crore, representing 17.3% growth YOY. Gross profit for the quarter was 110.3 crore, reflecting 48.4% increase compared to the same period last year. The gross margin expanded by 1117 basis points YOY to 53.2%. Gross margin was driven by cost optimization initiatives as well as improved product mix. EBITDA for the quarter was rupees 50.9 crore, which was up 72.4% YOY. EBITDA margins were at 24.6%, up 785 basis points YOY. EBITDA margin was driven by expansion in gross margin. PAT for the quarter was 44 crore, which grew 3x compared to the PAT of 14.7 crore in Q1 FY25. PAT growth was driven by higher EBITDA margin and strong other income driven by foreign currency gains. PAT margin for the quarter were 21.2%, which show an expansion of 1292 basis point YOY. Moving on to the balance sheet item, net cash and cash equivalent were at 270 crore. Our working capital for the quarter was around 128 days, which was increased by 11 days compared to FY25. This is mainly on account of the lower payable days due to the advance payment for better pricing of raw materials. While for the full year, we believe our working capital would be around 110 days. Although there was an increase in working capital, I'm happy to share that we have generated a strong cash flow of 94.6 crore from the operation during the quarter. With that, I request moderator to open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Akhan from JM Mutual Fund. Please go ahead.
Good afternoon, sir. I just wanted to understand what we are making in the battery chemicals side and how scalable and how big can this business be over the next 3 to 5 years, and what is the profitability of these products in the first place, because we are a little confused. We hear that profits are not very forthcoming in this business.
In electrolyte segment, we are proposed to manufacture electrolyte additives, which is a ingredient for electrolyte solution which goes into the battery. For this, we have already done the market development. We have already signed contract in place with the customer, and then we are at the point of completing our capex with respect to this business. So once this capex is completed, the commercial full-fledged supply will start, and margin will again be a function of the scalability of that product in that plant. But we are hopeful that this business will fetch us a good margin as compared to other spec chem business of which we are operating into as of now.
So what is the total investment in this business, and what is the kind of likely turnover we can make from this business?
In this business, I will not give you the exact number for the turnover, but what we can say is we are expecting 1.5 times the asset turn in this business. We have announced the capital expenditure of 177 crore for this business, which is for 2,000 metric ton of VC and 2,000 metric ton of FEC.
Okay. And the battery projects in India seem to be delayed. If we look at Exide, Amara, even Maruti and Tata Motors, almost everybody's battery projects are delayed. So, do you think that we can see any benefit of this investment in FY27, or will it be later?
Good question. See, let me just bring to your notice that, as I mentioned, we have already signed agreement in place for this business, and all our capacity, what is I just mentioned, this is for our export business. We are as of now not dependent for this capacity on any of the India expected business. In future, whenever the India business gets going, we will supply with the additional capacity in place. So we are not dependent on the domestic market. As and when the production plant gets completed, capacity gets completed, we will start shipping our materials, and it will fetch us the revenue by end of this financial year, maybe Q4 FY26.
And we are cost efficient compared to Chinese, sir?
Sir, when we get into any business, we make sure that we have to compete without any in the ecosystem, and we should be competitive. Then only we launch any of our product.
Okay. Similarly, can you just highlight what the plans are for the semiconductor business?
Sorry to interrupt you, sir. I will request you to get back in the queue, and if you have more questions. Thank you.
Yeah, thanks.
The next question is from the line of Nilesh Ghuge from HDFC Securities. Please go ahead.
Good afternoon, sir. Sir, my question is related to advanced pharmaceutical intermediates. See, we saw the very good growth of more than 23% YOY, but is it largely because of CDMO, and that too because of this Fermion contract? Is my understanding correct?
In fact, I mentioned during my commentary also that this business growth is largely driven by our core advanced intermediate business. Of course, the CDMO business is important, but the large portion of this growth comes from the ex-CDMO pharma intermediate business. Unfortunately, I will not be able to share the exact figures on this, but let me again restate that it's a large portion of growth is driven by ex-CDMO business growth.
Good, great. And is it volume driven, or there is a change in? I'm comparing YOY. So is it because of the volume has gone up, or is it price driven growth?
Volumes are also there, but the realization has improved as compared to Q1 FY25 because of favorable product mix.
Okay. And there is if I look at the gross profit level, there is a significant jump in the gross profit level, Q1Q and YOY also. But at the EBITDA level, sequentially, there is a dip. So what cost has gone up? Is it because of this operating cost, or is it because of the product mix that your EBITDA margin is below if I am lower than the Q4, but at the gross profit, it's much, much better if I compare sequentially.
So Nilesh, you have seen a better gross margin. And when we scale up, see, as I mentioned earlier, the Q1 is always the lowest quarter. So as we grow Q2, Q3, Q4, and our sales number will also grow there. So margin will improve from here. So this is where we are sending.
So in nutshell, the gross margin improvement is there because of the, as I just mentioned, favorable product mix as well as the cost improvement measure which we saw in some of our largest products. And of course, as Bhavin Bhai mentioned, the expense base, the EBITDA margin level, the expense base, expense level looks high as a percentage of sale because of the lower percentage base as compared to Q4 FY25.
Okay. Yeah. Thanks, Abhishek. Thanks a lot.
Thank you. The next question is from the line of Abhijit from KIE. Please go ahead.
Good afternoon. Thank you so much for taking my questions. Just on the battery business, rather, battery chemicals business, you mentioned, some new developments in terms of possibility of entering into a new contract sometime towards the end of this year or so. So just to understand, should we expect some further CapEx announcements in that business later on in this year? And are these new products also electrolytes, or are they in another part of the battery value chain?
Yes, as I mentioned, we have a couple of new products added in this segment. And from that segment also, the customer development are already being done. And now we are at a good stage to get the revenue, but not in this financial year. It will start from early next financial year. And of course, there will be some additional CapEx would be required in terms of additional infrastructure, utility, as well as some additional CapEx, which will be around 40 to 50 crore in total.
Okay. And are these electrolytes as well, or they are, some other category of products?
No, from electrolyte additives specifically.
You're right. Okay. Understood. Then just on Baba Fine Chemicals, as you mentioned in your opening remarks, the numbers have been a little bit soft. So if you could please just help us understand what exactly is happening there and how you see that semiconductor chemicals business overall trending over the next 2-3 years.
On Baba Fine Chemical semiconductor business, the demand has been soft from our end customer side, which was kind of in last quarter also. But as I mentioned earlier also, that the purpose of this acquisition was to get into this semiconductor business, and that's the reason we are aggressively going into other market of Korea, Japan, Taiwan, and where we see a good traction coming in. So we are very hopeful that post acquisition of this business and the kind of market traction we are seeing in this market, and as I mentioned, we are very near to a Japanese customer in this segment. So hopefully this business will again pick up and fetch us a better realization revenue in future, along with the ability of Korea and Taiwan.
Right. Thank you. Just two last quick ones from me. I'll combine both of them. One is the gross margin has gone to 53% this quarter. And from your comments, it seems like these cost improvements that we've made are sustainable in nature. So should we kind of, expect gross margins to stay north of 50% in coming periods? That was question number one. And number two, just on darolutamide, I believe there has been a label expansion in the recent past. So if you could please just share your thoughts on what this might mean in terms of, implications for the growth, for our growth in that business. Also, anything you would be able to add on your new pharma CDMO projects that you're expecting by year end. Thank you so much.
For gross margin improvement, as I mentioned, it is driven by some of the cost measurement improvement. So this is it's a normal day-to-day practice for us to improve the cost for each and every product. So this is what we have done for some of our largest product in last year, and that is visible in the numbers also in Q1 FY26. So those are kind of sustainable and the favorable product mix. So as and when this product mix becomes a favorable, it adds to the gross margin. That depends on the product mix. On the label expansion of this darolutamide, so the label expansion has been going on. It has been approved in some of the geography earlier. Now it has been approved in the geography of Europe as well, apart from US and now in Japan also. So this will definitely add to the demand of this product for our customer. For us, whatever guidance we are giving, that is based on the customer's demand. And that demand and the projection for next 5 years remains intact, at least from our side and from customer side. Any additional demand that I think customer will communicate to us, and we are hopeful to get a significant chunk from that also.
Okay, great. Thank you so much, and wish you all the best.
Thanks.
Thank you. The next question is from the line of Krishan Parwani from JM Financial. Please go ahead.
Yeah, hi sir. Congrats on strong set of numbers. Couple of questions from my side. First, on the semiconductor JV, wanted to understand when will you start the sampling from the pilot plant?
So, related to Korea JV, as I just mentioned, we have finalized the CapEx. The location has been identified and finalized. So now it's the time for us to quickly move on to the execution of the CapEx. So that is expected to get completed by second half of calendar year 2026. And then by end of 26 or early 2027, we should be able to give the production.
Yeah. So, understood. I was more referring to, as in, have you kind of made these products in Baba Fine Chem, or have you worked on these products in your R&D, or how is it? So that's probably my question was from more than...
No. These are completely new products from the existing product of Baba Fine Chem. These are advanced product than what we have as of now. Further, more detail I will not be able to share it as of now, but the technology for these products are being bring in by our Korean partner. And there, some of the R&D work will also be done at the Korean site only.
I would just like to add in Abhishek's comment is that whatever the Baba Fine Chem products which we are doing and selling to Harriers, we are not touching that at all for forward integration. Whatever we are doing is apart from that.
Okay, that's great to hear, sir. Secondly, just wanted to understand when will revenue contribution start from electrolyte additives and new CDMO project? I think you mentioned 4Q for the new CDMO, and what about the electrolyte additives?
That is also we are expecting in the Q4 also only.
Okay. And thirdly, on how are things progressing on the ex-CDMO products such as Apixaban, Rivaroxaban, and probably Trazodone as well?
So those products are doing good. As during the first question, as mentioned, the growth in this pharma intermediate business is being driven by ex-CDMO products, and that shows up in our numbers as well. So, and as I mentioned, the gross margin is driven by the favorable mix of the products. So these are the new products which are contributing in a good number along with the existing products who are doing good with the improved margin. And this is how the overall pharma ex-CDMO business is doing well for us.
Okay, that's great, sir. And just the last bit, given we are doing a lot of capex, so just wanted to know what is the split bit of these capex in FY26 and FY27. Just from the how much will you spend in 26 and 27?
So CapEx number, those are similar to what we discussed earlier also. The electrolyte additive CapEx is 180 crore, pilot plant is 30 crore, and maintenance CapEx is 40 crore. And this includes some of the CapEx or infrastructure requirement in electrolyte additive segment for the new product also.
Okay. Got it, sir. This is very helpful, and wish you all the best for the future, sir. Thank you so much.
Thank you. The next question is from the line of Dhara from Value Quest. Please go ahead.
Thank you so much for taking my question. While all my questions are answered, I just have this one last question on the margins, the segmental margins for pharma intermediate and specialty chemical.
So segmental margin for pharma is around 28% and specialty is around 11%.
Okay, thank you so much.
Thank you. The next question is from the line of Jason Soans from IDBI Capital. Please go ahead.
Yes, sir. Thank you so much for taking my question and congrats on a very good set of numbers. So I just wanted to understand one thing. I mean, one is that you mentioned that there is a higher other income, and you also mentioned that there is a higher foreign exchange gain for you. So is it possible to quantify that? What is the gain number in this quarter?
So in this quarter, we have other income of 16 crore. So out of that, foreign exchange gain is around 12.5 crore, and interest income is 3.5 crore.
Okay. And sir, I just also wanted to know, I mean, of course, the electrolyte additive capacity CapEx will actually get commissioned, let's say, by the end of this year, as you mentioned. So we have 2,000 tons of VEC and FEC both. Just wanted to know, you did mention that you are looking at an asset turn of 1.5x on the CapEx. Just wanted to know, for 27, do we have a certain volume target in mind for this CapEx out of 2,000, how much are we going to looking at a sales target or something like that?
I will not put it any specific number to it, but just let me give you the update that we now have a full visibility on the capex we have planned for 2,000 metric ton of VC and 2,000 metric ton of FEC. So it will ramp up very fast in FY27. And in fact, now the next step will be for us to set up or find a new capacity to cater the demand traction what we see in the market.
Okay, sure. And sir, also wanted to know, I mean, you did speak about, of course, there's a good traction in the ex-CDMO business. How is the pipeline looking, sir, going ahead for the the core intermediates business also, and any long-term contracts? How is the Fermion order scaling up? How is the visibility looking at going ahead for the API business?
First thing, ex-CDMO business, we have good visibility in terms of our product pipeline, as we have very strong product pipeline, R&D pipeline up to patent expiry of API still beyond 2040. So for which we have already developed the intermediate, we have already sampled it, we already submitted to customer on a commercial basic scale. So that gives us the visibility and the confidence that our ex-CDMO intermediate business will keep growing. And apart from that, we have a very good pipeline with the originator business also. This is how over the years we have structured our business and going well over more than 15 years. On the Fermion side, this is largely Fermion business is a large portion comes from the CDMO space. And there we have, for that particular contract, we have long-term contract already been signed for the product which has got patent expiry beyond 2033 and most of the geography 35. and long-term supply contract is already in place. So that also gives us a good visibility. And apart from that, we have other CDMO business also coming in in this financial year and the next financial years as well.
Okay, sir. And just one last one from my side. Sir, just wanted to know, of course, you are investing quite considerably in the semiconductors business. Now, of course, this is towards building the semiconductor materials, which goes to the likes of TSMC, the big Samsung, and, of course, ultimately. But I'm just wanted to know, like, from a micro perspective, what, of course, this must be very, very critical and a very, very niche segment, a high value add segment. Probably there'll be a lot of competition also here. So just wanted to, if you can give us some color on how you are gearing up for this, in terms of semiconductor, which can be a huge market for you. But just probably you're strengthening some side of R&D. Just could you give us some color on how you are gearing up for this?
Good question.
Yeah.
So for first thing, our existing business, it is already a proven business, proven technology is there, and that is already going into this market. So we have that technology and proven track record already available in this segment. Now it was a matter for us to expand that existing product to a newer geography of Korea, Taiwan, Japan market. So this is how we are now progressing or expanding our reach into other geography. Now, apart from now, we are venturing into the next level of technology, and which is near to the customers base in Korea and Taiwan. So that we are investing through our technology partner based in Korea, and that has got a good team of people who can help us on the commercialization of those technology in that newer products.
So in that, I'm just adding that, Abhishek, that these all we are incrementally, apart from Harriers product, and which is already developed by Baba, that we are expanding into this area.
Okay, and this will start early 2027. That is the estimate right now, production and everything, as you mentioned earlier.
Yes.
Yes. Okay. Thank you so much for answering the question.
Thank you. The next question is from the line of Yash Shah from Aditya Birla Life Insurance. Please go ahead.
Hi, sir. Thank you for the opportunity and congratulations on a great set of numbers in the first quarter. Also, I had more of a clarification question. So you've mentioned that you've done around capex of around 180 crores for the battery chemical electrolyte additives business. We are going to be doing incremental of 50 crores, as you mentioned earlier. So is it going to be for the same BC and FEC electrolyte, or as you mentioned that it is for electrolyte additives only? So what do we require this incremental capex for?
All products are in the category of electrolyte additives only, including VC and FEC. The additional capex, as I mentioned, that is because of the new introduction of new product for which the infrastructure building is being done, is going to be done in this financial year. And from next financial onward, we are expecting these new products to start producing and giving the revenue.
So this will be different from VC and FEC. Is that
Yes.
right?
Yes.
Okay. And can you give any kind of an indication, sir, of how much capacity for the new product are we planning right now?
We have not disclosed.
Okay. No problem, sir. Yeah, that's all from my side, sir. Thank you.
Thank you. The next question is from the line of Siddharth Purohit from InvestQ Investment Advisors Private Limited. Please go ahead.
Yeah. Hi, sir. As you rightly said in the opening remarks that a lot of your growth during this quarter has come from the non-CDMO pharma intermediate segment. So when the CDMO thing scales up in a couple of years down the line, is it fair to assume that the margin will further have a much better, margin profile in those set of products? I'm not asking for guidance, but a broad, understanding.
Of course, the CDMO business fetches us the better margin as compared to the ex-CDMO pharma intermediate business.
Okay. And within the CDMO, what will be the key three therapies that probably the top three therapies that we'll be targeting on incremental basis?
Sorry, I missed your voice. Come again?
What will be the key products in the CDMO that we'll be targeting?
So that actually we have stopped giving any product level guidance on names. But as people already know about one of the CDMO project which was publicly announced year back. But then we have three more projects which are expected to get commercialized by end of this financial year, and one of those new project, for one product we have already supplied the validation quantity in Q4 FY25. So now after regulatory approvals and all those things in place, it will start giving us the revenue by H2 FY26. So those product or projects are on track as per our projection or as per our budget.
Okay. So therapy-wise, oncology will continue to be the dominant one, both
Yes.
CDMO and also non-CDMO, right?
No, non-CDMO. CDMO oncology is the dominating therapy, and non-CDMO business, we have 17 therapeutic segment, which includes anticoagulant, antipsychotic, anti-Parkinson, anti-diabetic, cardiovascular as well.
Right. Okay, sir. Got it. Thank you.
Thanks.
Thank you. The next question is from the line of Pratik Oja from Systematics. Please go ahead.
Yes, hi sir. Thank you for the opportunity. Just one question from my side. Is there any specific intermediate which we manufacture that is used in the production of GLP-1 receptor, like semaglutide or liraglutide?
No, we do not have any intermediate for GLP-1 product. We do some coupling agents here.
For GLP.
For
Okay.
GLP.
Okay. Got it.
Thank you. The next question is from the line of Prashant Nair from Ambit Capital. Please go ahead.
Yeah, hi, good evening. Just have one question on your margins. So Naresh, usually your first quarter margins are the lowest, and then it keeps getting progressively better 2Q, 3Q, and 4Q. So should we expect a similar trend this year as well, especially on the pharma side, or would this have changed now that your CDMO contract has started? So would it be more evenly spread? How do we think about margins now?
On the revenue side, you rightly said revenue increases sequentially quarter on quarter from Q1 to Q4. Margin side, it's a function of product mix always. And as I mentioned during my commentary as well, we are committed to deliver better margin than FY25 margin. So that again, we are sure to deliver in this financial year as well.
So with a better operating leverage, there is a scope for improving the margin of 50 to 100 basis points as compared to full year last year.
Okay, understood. And just one question on the specialty chemical side. So how close are we, or how much more time in terms of maybe quarters or say years will we take to get to a steady state margin profile there, where say peak margins in that business?
See, on a steady state side, as it's always a function of market dynamics. On steady state side, I am seeing the gross margin in the range of 48 to 50% around.
So this is specialty chemicals that you're talking about?
Overall
48 to 50% gross margin. Okay. So my question was on the specialty chemical side. So where do you expect this business margins to stabilize, and how long could it take to get there?
Spec Chem business, as of now, it is double digit at a EBITDA level, and for that business, we are expecting in same kind of territory only. Once the electrolyte additive business picks up, it will have a better margin profile than this overall Spec Chem business.
Okay. So basically, starting next year, you should see some pickup happening here.
Yes,
27 is the year. Okay. All right. Got it. Thank you. Thank you so much. That's it from me.
Thank you. The next question is from the line of Kalpit Narvekar from EFG. Please go ahead.
Hi. Congratulations on a good set of numbers, and thanks so much for taking my questions. So I have two questions. So the first one is, there's a lot of news flow and noise around tariff and kind of dynamic changes around the tariff. So is there any impact that you see of that on the exports piece of your business and as well as on the customers, particularly on the CDMO or the API side? And my second question, maybe that's my first question. I'll go for the second one later. Okay.
Pharma no impact. For pharma side, we have not seen any impact as of now on either on a demand side or pricing side. Because of particularly the tariff situations.
Understood. And neither on the Spec Chem side, is it?
No. Spec Chem side also, as Naresh bhai mentioned, on a battery additive side, again, it's a regulatory environment which may even trigger a further rush for in the large industry players to scale up the business in the supply line apart from the Chinese supply line.
Understood. Thanks. And my second question is on the electrolyte business, right? Where your electrolyte additive business, where you are doing a lot of CapEx, and you mentioned that the customer base is from Japan, Korea, and Taiwan, etc. So, how are you winning this business? As in, currently those chemicals, etc., are supplied by some local suppliers over there or by Chinese suppliers? And what is your kind of competitive advantage versus these kind of current suppliers there, right?
On electrolyte additive side, the customer is Japan, Taiwan are customers for our semiconductor business, not for electrolyte additive segment. For this segment, largely at present the supplies are from China only.
Understood. And you're winning this business because you are more cost competitive from them versus them, or is there some kind of move from China plus one, etc., that's helping the business venture?
So players are diversifying their supply lines from China, and that is where we are targeting a small portion of that business.
Understood. Thank you so much. Thanks.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. The next question is from the line of Akshay from AK Investment. Please go ahead.
Hello, sir. First of all, congratulations for the excellent set of numbers. My first question is whether there has been any revenue share from Baba Fine Chemicals in Q1, and what is our expectation of revenue in FY26 and FY27 from this business, semiconductor chemicals business?
So Baba Fine Chem business side, we are expecting kind of similar revenue as compared to last year revenue.
Sir, what was the last year's revenue?
That is available in our published financial results.
Okay. Okay. All right, sir. And my second question is, we have hinted about 3 CDMO projects that we will commercialize by the end of financial year 26, right? So can it be large as much as our current CDMO projects in the next 2 to 3 years down the line?
No. These new CDMO projects are not this. The existing one is a kind of blockbuster product. These are not kind of those blockbuster products in the market, but we see the revenue potential of 50 to 100 crore each for those products.
And after this commercialization, can we expect that our margins will improve from the FY27 onwards?
CDMO business has a better margin compared to ex-CDMO business. So as and when the revenue composition shifts towards the CDMO business, the margin keeps on improving.
Okay, sir. Okay. All right. Thank you so much for answering my question, and all the best for the future.
Thanks.
Thank you. The next question is from the line of Jason Swans from IDBI Capital. Please go ahead.
Sir, thanks for taking my question again. So just had a small clarification. You've spoken about these 3 CDMO contracts. Are we looking to start it by the end of FY26, or are they still in talks? Just could you give me some clarity regarding these 3 which are upcoming? We just spoke about 50 to 100 crore each. Yeah.
As I mentioned earlier, the one CDMO project, we have already supplied the validation quantity during Q4 FY25. And after completion of regulatory process, we are expecting it to commercialize by end of this financial year, which is Q4 FY26. Immediately for the other project also, the may start from Q4 FY26. Validation is already going on.
Okay. So they may come in by Q4 FY26. All of them, basically. That's what you're saying.
Yes.
Okay. Sure.
Depends on the regulatory approval. It depends on the regulatory approval.
Depends on the regulatory approval. So it could probably go to the next year a little bit. Yeah. But they're all 50 to 100 crore, these 3. That's the size, what you're looking at.
Yes.
Okay. Thank you so much.
Thank you. The next question is from the line of Rohit Nagraj from B&K Securities. Please go ahead.
Thanks for the opportunity and congrats on good set of numbers. So first question is on the South Korean investment. So do we have this exclusive partnership? And in terms of geographies, are we only looking at Korea and Taiwan, or will be able to market those products across different geographies, given that even US is now going for semiconductor manufacturing? So can we sell the products across different geographies? Thank you.
So this product is not contained to any particular geography. We are mentioning this geography because that is where this industry is located. Otherwise, it is for worldwide except India.
Okay, sure. And second, in terms of the structure of this particular business, we have not given what is the potential, but from the addressable market size for the chemicals which will be manufactured here, what is the potential size currently? We know that the growth will be probably in double digits, but as of now, what could be the addressable market?
I do not have specific number to it as of now, but it's a huge industry, and we are only aiming for very few fraction of this industry to begin with.
And just one clarification, these products are already established in the market and they don't need any incremental validation, be it pilot scale or commercial scale. Is that understanding right?
There are some established products as well, and some of the new products are also going to be there in this business. And of course, this will go through some of those standard procedure related to validation and qualification.
Sure. Thanks a lot for answering all the questions, and all the best, sir.
Thanks.
Thank you. The next question is from the line of Lalit Kumar as an individual investor. Please go ahead. Hello, Mr. Lalit. Your voice is not audible.
Hello, I am audible?
Yes, yes.
Yes.
Good evening, sir. Sir, my two questions. First is, do you want to revise your guidance for FY26 like you gave 25% or increase your improvement in this guidance?
No, we have already given the guidance of 25% during my commentary as well as CMD's commentary, and we stick to that guidance.
Okay. Okay, sir. Your can we expect more growth in coming quarter? Will it remain the same as Q1?
So as it's a nature of business, sequentially it gets better and better, and ultimately we are targeting 25% growth rate. So sequentially, or it will definitely be better than the previous quarter.
Okay, sir. Thank you, sir.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
Thank you to the JM Financial team for hosting our conference call. We appreciate everyone's question and hope we have addressed most of your queries. If we missed any of your questions, please reach out to our investor relations team, and we will get back to you promptly. Once again, thank you very much, and good evening to everyone. Have a nice day.
Thank you. Ladies and gentlemen, on behalf of JM Financial Institutional Securities Limited and Acutaas Chemicals Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.